already existing blockchain networks. Now, to relate it more to the securities market, tokens are a little bit more relevant, and the different kinds of tokens. And one important one is something called a security token. So this is a type of digital token that represents ownership, as we mentioned, relating to either an asset or a security. So as a company, you could issue tokens that are attached to assets that you have, like real estate or securities. And ideally here, we are linking it to the traditional securities such as stocks and bonds that a company might have. So you'll find that a company can issue security tokens to raise capital. In the same way, you could issue shares to the public to raise capital, right? And then asset tokenization is a little bit, it's almost the same process, but a little bit more broad, because then we're looking at even an individual can issue an asset token. It's just merely backing a token that you issue to a particular asset. It might not really be your shares in the company. But you see, the importance of all of this in the securities market is that it's a way that people are actually using to raise funds, as opposed to the traditional using a bond or a share. It's all being done through this distributed ledger technology. It's being done through the blockchain, and it's pretty efficient because of the technology being used. Another important thing within this blockchain space or universe is, of course, the trading. So it's very possible to trade these tokens. It's very possible to trade the coins, the cryptocurrencies. So digital asset trading is just basically buying and selling of these cryptocurrencies and things like non-fungible tokens, which are just the same as tokens, except they're not interchangeable. So if you have a non-fungible token, it's like you have a token that represents a particular asset, let's say a car. So if I have this non-fungible token, an NFT, issued in relation to a car, BAB123, that non-fungible token will relate just to that. I can't exchange it for another token because that non-fungible token cannot be interchanged. It relates to that one token. And then security tokens, which we've already explained. So these can actually be traded and sold. And you find there are some exchanges that offer the trading of these digital assets, right? So that's a trend that we are seeing in the capital markets. That's a trend that most capital market spaces are moving into. This is the innovation that is being leveraged by the blockchain technology and the distributed ledger technology. And like I mentioned, this kind of technologies are not only being used by the capital markets. There's several other ways you can use blockchain. For example, there are people that use blockchain to for village banking, for example. There are people who are trying to use blockchain for a lands system. So say Ministry of Lands, all their records are on a blockchain. So every time somebody buys property, the transaction is recorded on each and every computer that's connected to that blockchain. Therefore, no one can really manipulate the system. But with the capital markets, this is like the universe that's using this kind of technology. And so the benefits of using distributed ledger technology and blockchain ideally is security, transparency, efficiency, and scalability. With security, we're just saying you can't tamper with the information that's on the blockchain, right? With transparency, everyone gets to see the transaction that's happened, and it's recorded on each and everyone's ledger or computer as long as they're connected to that network. With efficiency, it has been proven that blockchain technology is much faster than the normal technology for processing transactions. And you can actually process huge transactions using blockchain technology. So we'll move on to artificial intelligence. So with artificial intelligence, ideally what we're looking at is a branch of computer science that deals with the creation of intelligent agents, which are systems that can reason, learn, and act autonomously. So just think of artificial intelligence as another human being, right? It's different from the normal computer systems. And I know I'm not a computer expert, but it's different from the normal computer systems, which what you put in is what you get out. It's like garbage in, garbage out. But with artificial intelligence, there's a level of reasoning and independence in the information that's given, right? Because there's this what we call machine learning and some deep learning that's used to create. There's so many other technologies rather that make up artificial intelligence, but there's these intimate things that are used to make this artificial person that can interact even with another person without human intervention. So when you talk about machine learning, we're talking about a type of artificial intelligence that allows computers to learn and improve from experience without being explicitly programmed. Machine learning, we use historic data as input to predict new output values. So in terms of how these things sit or interact with each other, you have artificial intelligence as the bigger broad circle where machine learning and deep learning sit in. So with artificial intelligence, it's basically just a program that can sense, reason, act, and adapt. Machine learning, we are looking at algorithms whose performance improve as they're exposed to more data over time. And then there's deep learning, which is a little bit more focused and intimate, which is like a subset of machine learning, and utilizes neural networks to learn from vast amounts of information. So it's like these neural networks are more like a human brain. And that's why if you look at the historic, if you look at artificial intelligence historically, you note that artificial intelligence started a long time ago. In the 1950s was when people started talking about artificial intelligence. But there seems to have been an uprise in the use and discussions relating to artificial intelligence because of how it has advanced. With time, machine learning began to flourish. And now, after the 2010s, there's more of deep learning breakthroughs that are now really driving this artificial intelligence agenda. So apart from artificial intelligence, we have what is known as alternative data. And remember, we're looking at the space of capital markets. So alternative data is a tool that is used to describe data that is not traditionally used in financial analysis, like your normal financial statements, annual reports, and the like. So this is now getting data from things like social media, satellite imagery, and sensor data to provide insights into market trends and behaviors that traditional data cannot really give you. Alternative data is usually linked to predictive analytics, which is basically another field of data science that uses statistical techniques to predict future outcomes. So it's more or less able to predict what will happen based on the information that it has. So predictive analytics can be used to predict stock prices, customer behavior, and other events. And all this is just using this technology. So predictive analytics can be used in conjunction with alternative data to provide more accurate predictions. For example, you can tell sentiment, you can using analytic data, you can get sentiments on a particular product of social media, let's say Twitter, and be able to predict whether a certain value in stock will either go up or down using predictive analytics and alternative data. So now trying to really bring this artificial intelligence and the rest to the capital markets, we look at how has this influenced the capital markets generally before we really come to the context of Zambia. You look at robo-advisors, automatic trading, sentiment analysis, risk management, fraud detection, compliance. I'll get into more details for some of them, but because of time, I'll not go into details for all of them, just maybe highlight one or two. Let's look at robo-advisors. So within this context of the capital markets, you'll find, since robo-advisors are ideally based on this artificial intelligence, they're able to automatically give advice to, let's say, your clients. So I run an independent advisory company, and I'm utilizing these robo-advisors to give investment advice. Robo-advisors can also be used to manage investment portfolios, right, for particular individuals or even for the company itself. Another aspect of AI that is being utilized in the capital markets is with automatic trading. So this is where you're trading using AI to make trades automatically. So the traders will analyze the algorithms that will be set in this as a system will be able to analyze vast amounts of data, including, let's say, social media data, and make trades automatically based on that information. And obviously, it's going to be more efficient and faster than what humans can do. And it has been seen to give competitive edge to certain institutions that invest heavily in this. Sentiment analysis, we've kind of highlighted this. So it's basically a technique that uses AI to analyze text and identify the underlying sentiment, such as positive or negative or neutral. So it's looking at, let's say, the product has been rolled out, you roll out a new product, and this software is able to determine the sentiment in the market about, is it positive, is it negative? Or do you think the value will go up or go down based on the analysis that you've done based on sentiment? Risk management, I won't do much into this. I think it's a little bit straightforward, but you can use artificial intelligence for risk management. For fraud detection as well, regulators can actually use these advancements in technology as well. So like the regulators in many jurisdictions and even here in Zambia are really trying to move to what's called supervisory technology, or SupTech, sometimes also called RegTech, regulatory technology. That's really just leveraging on these advancements in technology to supervise and regulate the capital markets. Companies can use it for compliance as well. So giving a bit more specific examples, we'll look at how banks, hedge funds, fund managers, and regulators, which I've already highlighted, actually use artificial intelligence. So for banks, for example, they can use artificial intelligence to automate loan approvals and undertake risk assessments. So the computer will be able to assess a loan application, look at your credit scores based on the information it has, and be able to approve your loan application without any human interface whatsoever. With hedge funds, they can use artificial intelligence to trade, ideally looking at sentiments and all those predictive analytics that we discussed. Asset managers can also use artificial intelligence to really manage their portfolios and the risk and return in their portfolios. Regulators are also using, like I mentioned, large amounts of data to be analyzed by artificial intelligence and be able to determine patterns and indicate suspicious activity. So you're even able to indicate patterns and trends in the market based on your analytics and the information that you're getting on social media from different complaints that you've been received. Globally, you can analyze trends and look at, okay, where's the risk sitting at now, or what would be the current risk that the regulator will face based on how global trends are moving. So artificial intelligence is really being used, or can be used by almost everyone, from the market player to the regulator. So when you bring it within the context of Zambia, I must say, I don't think we have reached that advanced level yet of using artificial intelligence and blockchain technology to the level that it might be used in other developed jurisdictions. But we have a certain level of innovation in our capital markets as well. There's a peer-to-peer lending and crowdfunding, which ideally is, I think we have 2 entities in our sandbox currently that have peer-to-peer lending platforms, which are just like technology being able to bring together investors and borrowers. So on one side, I'm investing money. On the other side, other people are able to borrow that money and pay back, and then people get returns. So all this is being done through a peer-to-peer lending system, similar to the crowdfunding platforms that a few people have kind of rolled out. And I think maybe in the second cohort, we might have another crowdfunding platform. With global securities offerings, I don't think we've seen any yet, but we can see that in the capital markets, there's a lot of opportunity for global securities offering because of how technology is really just helping to break down those territorial barriers. We also have crypto assets trading. We have an entity in the sandbox that offers cryptocurrency trading. So, of course, we haven't gone into the extent of creating our own blockchains and stuff like that, but at least we do have that level of innovation, people coming up with helping to trade. Asset tokenization, we've had a few entities express interest with this, offering cryptocurrencies based on actual assets that they hold around the world and everything. Of course, we haven't had real advancements with this, but there has been a lot of conversation in the background. With robo-advisory, I think the most I have seen is just normal Q&A questions that are answered by chatbots on some of these websites. But there's a potential for this technology to be improved, to be able to actually give proper advice based on information that has not already been inputted in the system, right? The way ChatGPT might work. Yeah, so I think these are the main technological advancements that we've seen within the Zambian jurisdictions relating to the capital market. Of course, we'd like to see more, but so far this is as far as I would say it goes. Now let's look at the importance of capital. Okay, so I see a hand.
Kalonga, there's a question. There are two questions for you here.
Okay.
The chat. There's a question from Sofwa Puta that says, "Are the identified technological trends being utilized in the Zambian capital markets?" Then we also have another. We've got two more questions one that reads, Zambia's capital markets for years have not grown to the expected level compared to other countries in the region. Are there any new ideas in the market by players to grow the market? And the second question is the innovation happening away from the traditional capital market trading. Are we trading in cryptocurrency or tokens in Zambia? Yeah, those are the two questions.
Okay, I think I've partially addressed the two questions in my previous slide. Starting with, sorry, I think I'm going forward. Starting with Sofwa's question. Some moment, where's that question? Identify technology trends being utilized in the Zambian capital markets. I can say yes, there are, but not really to the extent that they could be utilized, because you would appreciate that these technologies are quite, firstly, very technical, and they can be quite resource intensive. So I think with time, we'll see more development. For example, in our first sandbox cohort, like I mentioned, there's that peer-to-peer lending system, which ideally is a system that is meant to automatically do this lending and investing and borrowing kind of thing that some banks utilize. We have cryptocurrency trading happening in one of our participants in the sandbox as well. So most of these products don't sit squarely well within the traditional capital markets, and that's why you have things like the regulatory sandbox, which helps to have people test their innovative ideas in a controlled environment. So the second question, Zambia's capital markets for years has not grown to the expected level compared to other countries in the region. Are there new ideas in the market by players to grow the market. So some of these things I've mentioned are part of it. We had presentations, I think it was earlier this year or late last year, from other, I can say, institutions that might be in the second cohort with more innovative ideas. So with time, we're seeing things improve. And that's why we have the sandbox to try and help that kind of innovation and people to step up and bring out the ideas within the capital markets. So I can say, yes, the sandbox is meant to actually help the market grow and encourage more innovation. Yeah. So let me just try and finish my last slides before we can take the next questions. The importance of capital market innovation. So with this kind of technology, of course, we're expecting to see increased efficiency, enhanced market transparency, improved access to capital, and better risk management and compliance. Not only because we expect, let's say, the market to be innovative, but we also expect ourselves as a commission to leverage these technologies to help in the efficiency of the market. So, as I mentioned earlier, this will also help in market expansion and diversification, because then you have an opportunity to actually get investments, let's say, for your company, even from other jurisdictions, because with technology, you don't really have borders, right? And this leads to the issue of global connectivity. So the world is slowly becoming more connected, and you don't want to kind of remain behind in this. And that's why we're trying to really encourage innovation. It might also improve customer experience and engagement, because then there's really less human interface. For example, if you're using artificial intelligence, you can automate most of these processes and making things much faster and efficient. So if we look at the challenges that are most likely to be faced, and of course, technology comes with its own risks, including cybersecurity risks and data protection. These are huge challenges that, of course, would have to be addressed from a regulator's point of view, and of course, even just from the country's, I can say the entire country's point of view, because then you realize that most of these technological advancements, or scammers who use technology, leverage a lot on the lack of knowledge and capacity of their targets, more or less. So there's a lot of risk that's been identified in that area. And with that innovation, we need to make sure that even as we encourage innovation, we try and find ways to make sure that these risks and challenges are also addressed. We have also market conduct and systemic risks that arise. Research has shown that for example, the cryptocurrency space, the virtual asset space, may not at the moment directly affect the financial markets, but with time, there's a possibility that it might grow in significance to be able to affect the financial market and therefore cause systemic risk. Because I know you'd appreciate that there's certain, of course, legitimate cryptocurrency businesses around the world that have failed, but even despite those failures, there hasn't been much shock to the traditional, like I say, capital markets and other financial markets. But with time, with the interconnectedness of everything, there is that risk that systemically there might be one failure might cause the failure of the entire financial system. So those are some things as well that as a regulator we need to keep having in mind and addressing as we encourage innovation. Another risk or challenge is relating to money laundering, because it's quite easy to move funds, especially through this cryptocurrency. It becomes easier for people to do illegal things and try and wash the money through other legitimate ways. But at the same time, there's also research that has shown that most people who are doing illegal things will not want to use things like digital platforms, because then there's always a trail. They would rather use cash, which is very hard to trace and do the money laundering, but it's definitely something that has to be considered and thought about. Another one relates to territorial limitations in regulation. So if as a country, Zambia, we can only regulate and protect investors within the country, and we can't, for example, we can't protect you against investments or innovations in other countries, let's say Tanzania, South Africa, it becomes a challenge then to keep encouraging, because as you encourage innovation, you're also encouraging the public to invest in innovation. And because innovation might not be restricted to the Zambian jurisdiction, people might want to invest in other products abroad. So how do you try and help protect investors? Because if investors suffer, they might not even want to invest in the local products because, I mean, they think cryptocurrency is a scam because they invested in some products from Nigeria, for example. So in terms of the regulator's approach with innovation, you find different jurisdictions will have different approaches. For Zambia, initially for cryptocurrency, we had a wait and see, where we are. This is something that became rapidly new, and you can't rush into regulating. So you take a step back, but watch. And as time moves on, and as currently happening, there's learning points, there's more research, there's more information. And so the conversation of how do we regulate this space begin to arise. Others will have a test and learn kind of approach. Others will use regulatory sandboxes like we are doing here at the Securities and Exchange Commission. I know the Bank of Zambia also has a regulatory sandbox, and the Pensions and Insurance Authority should also be considering a sandbox. Others will use innovation hubs. And then you can also use regulatory laws and reforms, like I've mentioned with regards to the cryptocurrencies. Then there's now that need, because of the appetite for this kind of innovative product, there's a need to kind of address those challenges and risks that are being highlighted and addressed. And so you'll find that the law will become one way as a regulator that we can try and control this environment, aside from using the sandboxes that are already being used. So in terms of future trends and outlooks, I'm running out of time, so I'll just quickly go through this. We have potential to see greater financial inclusion because people can easily invest from their phones and things like that. We'll have streamlined and quicker trade transaction settlements because of improvements in this technology, enhanced transparency, improved efficiency for reasons I've already stated. We'll have automated compliance. I mean, the Commission has a platform where you can really just by a click of a button comply with your submissions and things like that. Real-time market insights and optimizing trade strategies because you are employing artificial intelligence and alternative data and predictive analytics to help you actually supervise the market, for example. We'll have more efficient data management, increased liquidity and accessibility, which hopefully will be one of the ways to address one of the challenges that we're seeing in the current traditional markets where we don't have much liquidity. So with innovation, it is hoped that you see more people become more interested in capital market products and see more liquidity within the capital markets space. We also have more balanced innovation and investor protection. We have enhanced investor education and enhanced collaboration with partnerships, because the more we encourage innovation, the more there's a need to collaborate with other institutions within the country and other regulators in other jurisdictions, because like we mentioned, everything is becoming more connected. And so there's going to be that enhanced collaboration and partnerships with regulators within and outside the jurisdiction. So that brings me to the end of my presentation. Over to you, Comfort. Thank you.
All right, thank you very much, Kalonga, for that wonderful presentation. And as Kalonga said, we are opening up the floor to questions and contributions. So you can drop a question in the chat box, or you can also raise your hand and your question will be attended to. Then we also have a poll that I am launching right now. So you can feel free to take part in that poll. All right, so we have a comment from Daveni that says we need more information and hopefully this will continue. Thumbs up. But how do capital markets in Zambia ensure that our indigenous Zambians become wealthy? Okay, then we have another comment from Vivian that says beautiful presentation. Thank you, Vivian. So I think to help answer Daveni's question, well, the capital markets help our indigenous Zambians in a couple of ways, and this is why we encourage people to participate in the markets and for firms to also list in the markets. Because on one hand, you have for the investor, the Zambian investor, when you invest in the capital markets, you get to earn a return on your investment. So suppose you buy stocks in Zanaco Zambia or any of the listed entities, you earn your return in two ways. Either the share price appreciates, let's say from 5 kwacha to 10 kwacha, you earn 5 kwacha. And alternatively, if the company was to issue a dividend, you would earn a return on that dividend that would come directly to you. So yes, our indigenous Zambians do become wealthy at the end of the day. And that's why we as SEC are here to protect them, to ensure that the market is well functional and everything is in place so that you as an investor are safe and that your money is safe. And at the end of the day, you do earn your return. And on the side of companies, we encourage firms to list on the markets because, it's a cheaper source of finance for you. So you get to take those funds and invest them into your business operations. And, in the long run, that increases your firm's capacity, it grows your firm. Then, as your firm grows, obviously, you will be able to even create jobs for others. And, the more you create jobs, the more money that's flowing within the economy. The more money that's flowing within the economy, the more products that are available in the economy. In the end, we'll have economic growth and our GDP will increase. And I can see people are still answering our poll.
Yeah, and just to add to what you mentioned, Comfort, I think our aim as Zambians should not be to, okay, it's good to want to be wealthy, but more importantly than wanting to be wealthy is for you to have financial health. So with the capital markets, you have an opportunity to diversify your sources of income, your investments, your portfolios. You won't rely only on your job and your normal revenue and income. You can invest in shares, bonds, and things like that to be able to actually save for the longer term. That's for as an individual. So that way you become a little bit more resistant to financial shocks, even as an individual. So these are principles that should not only be considered by companies, but even as individuals, these are things that we need to start thinking about. It's important for us to attain financial health as well. Thank you.
Thank you very much for that.
Very important contributions. Comfort, if you allow me, I'd like to just add
Yes.
to what you have deliberated, and truly so. When we speak financial health, we speak from the point where we are saying we need to have the knowledge and the skills to take up the products that are offered on the capital markets platforms. So firstly, it's the capital markets itself that we are ensuring that it's well functioning and that there's adequate products that you, the investors, can pick up and use to stay, grow your wealth, or achieve a number of your financial objectives, which come in a variety. Of course, there are so many things, or what we call key life events that everybody goes through, which need financing. And the capital markets are very suited to provide meeting of those financial objectives, because which are in the long term. Most of them best suited for the long term, for your planning, for example, for your education, for buying a car, a home, even health needs for the longer term, and so on. Your wedding, it could be simple things like that, but they need huge outlays of money and need planning from a long time ago, so to say. So what you need, or we all need, is to acquire the know-how, the knowledge of how to use up those products, how they can work for us, and how to play the game, so to say. So for your own comfort, we would like you to know that we have also gone into the school syllabus, so to make sure that every Zambian, at least, who goes to school, and most of the Zambians do, as we know now, we even have free education. So the best driver of this knowledge is through the school syllabus. So we have endeavored to take financial education and capital market content through the school syllabus. Otherwise, this same town hall is part of our ways to ensure that anybody who is interested can access the Securities and Exchange Commission to acquire some knowledge. And if you follow us very well, you find that we have various topics, and you find the presentations and the videos on Facebook, so you can go back and check out which one will help you, or you can even ask us directly. We'll be able to help you with the in aspects that where you need some help in terms of taking up the products in the capital market. Thank you. Back to you, Comfort.
Thank you very much for that wonderful contribution. And it's very true. And that's one of the reasons why, as much as anything, we focus a lot on financial education and financial literacy, so that at the end of the day, everybody knows about the capital markets, the financial markets, how to handle their finances, because in the long run, these are very key to not only developing the economy, but to developing the capital markets and Zambia's financial system. So thank you very much for that contribution, Dingase. Then, so looking at our chat box, Kalonga, we've got a question for you. So what are the key regulations governing capital markets locally?
Okay, so before I answer that question, I've also seen a question from Dennis Chiwala. Says, has SEC started drafting any regulations or guidelines for cryptocurrency trading? So no, we haven't started drafting yet, but the research and the works are underway. As you would appreciate, cryptocurrencies, I think, cut across both securities and more or less currencies. So you find we need to actually interact more with other regulators like the Bank of Zambia to see what's the best way to actually regulate these securities. So yes, the conversations have started, but there's no current regulation yet. And then relating to the questions, what key regulations govern capital markets? That was the question, right? From Grayford?
Yeah, from Greyfoot. That was the question.
Okay, so the key regulations governing capital markets, there's actually a lot of regulation, but the main piece of legislation is the Securities Act, which was enacted in 2016 and amended in 2022. So that's the main regulation, and then of course it has its subsidiary, or I can say, for lack of a better word, baby legislations as statutory instruments. And the Commission has also issued some guidelines and directives relating to specific issues. So that forms the main framework for regulation of the capital markets locally. But with regards to cryptocurrency itself, we really don't have that framework yet. Yeah, thank you.
All right, thank you for that, Kalonga. Then we have another question from Greyford that says, how are market participants, such as investment banks, brokers, and securities exchanges regulated and licensed?
Okay, so like I mentioned, the Securities Act is the principal law that actually governs the regulation of these institutions. But if you see things like banks, they're also regulated by the Bank of Zambia, who's like the main regulator of banks. And depending on the nature of business that they undertake, if their business also includes something in the capital market space, they must get the registration and licensing from the Commission for that aspect. So the Securities Act provides the framework for registration and licensing of any person that wants to participate in the capital markets as a dealer, as trying to raise capital and things like that. So I don't want to get to use the technical terms, but yes, the Securities Act provides for the licensing framework for all those parties that you've mentioned. Thank you. Maybe if I may also just add, for more information about such kind of things, the Commission is very open. You might come through and we can show you the step-by-step things that must be done for licensing for a particular thing. If you want to be a broker, there are particular steps that must be taken and documentation that must be submitted to the Commission. Thank you.
All right, thank you, Kalonga, for that. All right, and yeah, Greyfoot says thank you. I'm guessing all his questions were answered. Right, so I think in interest of time, so to find more information about all this, a lot of this is actually information about all this is available on our website, which is www.seczambia.org.zm. So we have a lot of information and literature that's available on our website. You can find the Securities Act there. Greyfoot, in relation to your question, we've got a lot of information regarding the sandbox innovations on our website. So should you want more information on that, you can go to our website. Then alternatively, you can also always reach out to us, because the Commission is very open and welcoming to all your questions. So feel free to pass through. You can email us, you can reach us through Facebook. And yeah, we'll be willing to answer any questions that you may have.
Yep. Comfort, just maybe to take the two last questions that I think when posted in the question and answer. There's one that talks about whether SEC, the plans for SEC to remote trading in NY. I think that's the New York Stock Exchange. I don't think there are any restrictions, firstly, for you to trade in whatever exchange you want to trading. So that's not really our mandate as the Commission. The Commission is looking at the Zambian capital markets, exchanges that operate within the Zambian capital markets. And also there's another question that says, with regards to legislation drafting, what is the proposed consultative approach? So at the moment, what's actually being done is more or less research into the risks and the best way to actually regulate. Within the legislative drafting process, we will get to the stage of undertaking stakeholder consultations and maybe inviting whichever relevant parties are. Yeah, so I believe that the time has ended, and I just thought I should squeeze in answers to those questions so that no one feels left out. Thank you.
All right, awesome. That's very great. Thank you, Kalonga. So yeah, as I said earlier, a lot of this information is readily available on our website. Same as we also have a lot of information on our Facebook. If you do want to ask any more questions, you can always pay us a visit. You can send us an email, send us a message on Facebook, and we're always welcoming. So I would like to thank everybody for your attendance, your participation. We had good participation. We also thank you for taking part in the poll. And I also like to thank Kalonga for the wonderful presentation that we had. So thank you. And remember to join us for our next town hall next month. We hold these town halls on the last Thursday of every month. So please be ready, tell a friend to tell a friend. And yeah, hope to see you in the next town hall. Thank you very much for your participation and attendance. I will now be ending the meeting. So thank you very much and see you next time.